Hey, what's up guys, this is Mario, and in today's video, I'm gonna talk about a very important topic when it comes down to money, and that is credit. In the United States, if you don't have good credit, you're not gonna have a nice car, you're not gonna have a nice house, and most likely when you wanna rent an apartment, it's not gonna be in the best neighborhood where you will feel safe for yourself and your family. This is a very important topic, especially for the minority community, the African Americans or even Latinos. I've seen this happen too many times where I've had personal friends and family co-sign their credit to other family members, either to buy a car or a house, and then later find out that they haven't been paying their payments in time and now their credit is damaged. This is my community and it really hurts me to see this. This is not acceptable. So in this video, I'm gonna cover how to build credit from scratch and also what steps you should take to make sure you protect that credit. So one day, hey, you could buy your dream car, your dream house, and even move into your dream neighborhood. And also smash that like button. Just playing, guys. All right, so let's get started, guys. Okay, guys, so how do you start credit from scratch? The best thing to do is to start as soon as possible. Especially when you're 18 and you have your first job, whether it be a part-time job or a full-time job, does not matter. If you're 18, if you have a job, you should be applying for credit. So the first thing you need to do when you're 18 years old or older or when you have your first job is you have to open up a checking account and a savings account and make sure you have a direct deposit. Because when you apply for credit, that's literally what banks are gonna look for. Do you have money coming in, direct deposit, and do you have a checking and savings account? Do you have money? Pretty much that's what banks are gonna look at. The next thing you need to do, of course, is apply for your first credit card. When I was 18 years old, my first credit card was actually a gas card at my local gas station. I applied for this credit card and I only got like $200-300, and I used this money to pay for the gasoline in my car, and I always pay the balance at the end of the month. Now, if you love to go to a retail store like at a Macy's, Nike store, or Forever 21, does not matter. Those are actually good places to open up a credit card. They're probably only gonna give you, like I said, $200, maybe $500 max, especially if it's your first one, but it's gonna build your credit history. And then from there, you could build your credit. And I'm gonna show you how. The next thing I'm gonna talk about is how does credit work? How does credit work overall? What is it based on? What do they look at? What is it rated on? Credit, guys, is pretty much an honor system. It is an honor system. It is based on your habits. Do you have good habits or do you have bad habits? If you have good habits, you pay your credit cards and debt on time. If you have bad habits, you do not pay on time, or sometimes you miss your payments. That is literally what the credit is all about, and that's literally what it looks like. Now, I want to make sure that I misspell this myth. Credit is not based on how much you make, it is based on the habits. There's a lot of people that think, oh man, I need to make $100,000 or more to have really good credit. That is not true, okay? You can have very good credit if you have a minimum wage job. Again, repeat that. You can have really good credit if you have a minimum wage job, because it is based on habit. It's an honor system, okay? Now, just to let you know, 35% of your credit score is based on payment history. So the length of payment history. So how long have you been paying your debt on time every single time? And that's what banks are looking for. Now, 30% of your credit score is based on credit utilization, meaning how much do I owe compared to how much credit available I have. So an example, let's say that my first credit card, I applied and a bank let me borrow $1,000. So yeah, I decided to go to the store, maybe buy some stuff that I need. I spent $300 on that credit card. So I used 30% out of my credit available, so that's 30% credit utilization. Now that's pretty low. So that doesn't hurt my credit score. Now, if I have a 50% or 100% credit utilization, then my credit score is gonna be affected. So pretty much what that means is do not max your credit cards. That's it. Do not max your credit cards. That's the moral of this story when it comes down to credit utilization. All right, the next thing, 15% of your credit score is based on length of credit. How long have you had credit for? The longer the better. That's the reason why, if you're 18 years old, as soon as you get your first time job, you should be applying for credit as soon as possible to build that length of credit. Now, just to give you an example, if you're 18 years old and by the time you're 28 years old, that is a 10-year period. If you have a 10-year credit history, length of credit history, and you've made your payments on time, and you've always had low balances on your credit card, you're gonna have a really good high credit score, and you should be able to qualify for a mortgage if your income permits it, of course. So you should be able to have good credit and enough to apply for a mortgage to buy your first house. So remember that, guys. All right, so the next thing I want to cover is the pursuit of new credit. Now, 10% of your credit score is based on pursuit of new credit. Have you been applying to other credit cards? So my recommendation is that once you apply for your first credit card and you've been approved, start using it, to build that credit history, pay it at the end of the month, the full amount. Kind of use it like if it was cash, use it to pay, groceries, use it to pay gasoline, whatever it is, but always pay at the end of the month to kind of build that good history, and always pay on time. That's very important. Always pay on time. And once you've done that, apply for a new credit. I say apply for new credit every 6 months. You don't want to be applying to too many credit cards because that also could hurt your credit. Now, the next part, 10% of your credit score is based on the type of credit you have. So banks would also see how the type of credit you have. Like, for example, you have credit cards, store cards, also car loans, and also mortgage loans to buy a house. So they want to see that. So if you have a diversity of credit, that also helps and increases your credit score. So my recommendation, especially when you first start, building credit, is to always go with store credit cards, move on to bank credit cards, and maybe apply for a car loan, because we all need cars, especially go to work. And then once you're old enough and you're ready to and you have a good career, you're old enough to make that commitment, you can buy your house. And that's when you start applying for that mortgage, okay? All right, so let's talk about credit scores and how that works. So pretty much credit score is a number between 300 to 850. So 300, which in this case I'm gonna cover, it's the left, it's really bad credit score, okay? The middle, we're talking about fair credit or good credit. It's anywhere between 690 to 720. That is fair to good credit. Anything between 750 to 800, 850, that's really good credit. Okay, so I'm just kind of giving you an example of a pendulum. Very bad credit, very good credit. Okay, so you go from 300 all the way to 850. But keep in mind, guys, and this is very, very important to kind of discuss, is that when you first open a credit card, you pretty much are in the middle because you have no history, okay? So lenders do not know if you have good habits, you pay your stuff on time, or if you have bad habits and you're going to like the 300 low, very, very, very bad credit score. So again, when you first start, you're pretty much in the middle, guys. You literally are in the middle. So you're looking at around a range of like 630 to like 720, you know what I mean? So you kind of start in the middle, okay? So depending on your actions, your habits, you're either gonna go to the left, if you stop missing payments, you max out your credit card, you're gonna be going to the left side, from like 650, 500, 400, 300, and then you have really, really bad credit, okay? Let's say, I'm gonna give two examples. I'm gonna give a bad example and a good example of how to manage your credit. So you applied for your first credit card, you're pretty much in the middle, around 650 to 720, fair to good credit. That's where we all start, okay? That's where we all start. And the next, let's say that a bad example, you apply for your first store credit, you miss your first payment, the pendulum starts swinging to the left. Now you're not at 650 or 700, now you're like at 550. You keep missing payments, do not pay on time, you max out your credit card, and you literally stop paying your credit card. Now you're like at very bad credit, 300. So your credit score is like around 300. So you have really bad credit score because you did not pay, you make your payments in time, bro. Because again, credit is based on an honor system, based on habits. Okay, now let me give you a good example. Again, you apply for your first credit card, you're literally on the middle, around 650 to 720, fair to good credit. You make your payments in time every single time. Again, you don't have to pay the full balance at the end of the month. All you have to do is pay at least the minimum, but you have to pay in time every single time. So you make your payments on time every single time. You apply for new credit. You know, you could be keeping the same momentum for 2 years, 3 years, 5 years. You apply for a car loan, you get your credit approved, and eventually, you have like 10 years of good credit history, a good payment history, and good credit utilization, etc. You know, now your credit score is around 850, and then pretty much banks are gonna be, at that point, banks are gonna be pretty much throwing money at you, okay? So what I mean by banks are throwing money at you, what I mean is that you no longer have to go to your local bank and apply for a credit card. Banks are literally gonna send you promotionals in the mail to try to get your business, okay? That is banks throwing money at you. And I'm gonna give you an example, guys, okay? This has literally been the last past month and a half. Now, I did put this little yellow strip. It's actually a sticky note. I actually put a sticky note to kind of cover my address because I don't want no creepers. So, but you'll see my name. This is an offer from Alaska Airlines for a Alaska credit card. This is an offer from HBC Bank. Look at this, 0% interest, 0% annual fee for 18 months on the credit card. And again, I'm gonna show you guys my name right there, Mario Alvarado. Again, I'm blocking my address. Okay, here's one from Citibank. Okay, again, blocking my address. Here's my name, Mario Alvarado. Here's another one. This is from US Bank. Okay, 0% APR, 0% interest until April 2021. These are the best ones actually. And look, my name, Mario Alvarado. I'm blocking my address again. All right, this will Discover. Yes, another 0% interest by December 2019. Oh no, I have to respond by that time, but I get 0% on balance transfers. Again, my name, Mario Alvarado, Discover. And my favorite one that I just recently got, that I actually really love this card, is an offer for a black card. Okay, here's my name, Mario Alvarado. Again, I'm blocking my address. And this is an invitation, guys. You know how long it takes to get an offer for a black card? It takes, I think it takes at least 10 years of good credit history, okay? This does not happen overnight, guys. It takes time to build this. I'm not doing this to flex. I'm not trying to show off or flex, guys. What I'm trying to tell you guys that this is possible. Anybody, and I mean anybody could do this, guys, all right? Now, I am brown and I am Mexican. If I could do this, you could do it too, all right, guys? I'm gonna remind you guys, it's not about the income. It really is. It's about your habits. Or do you have good habits? Are you paying your stuff on time, all right? That's really what it's about, okay, guys? So if I could do it, you could do it, okay? All right, moving on to the next part. So the next question is, how do I check my credit score? How do I know where can I go to check my credit score? You could actually check your credit score for free at creditkarma.com. And I put a link in the description so you can look at it and look at your credit. Again, it's totally 100% for free, guys. You can look at your credit score to see where you are, okay? Now, another myth that I want to bust is it does not hurt your credit if you check your credit score. If you yourself go out and check your credit score, that will not hurt your credit score, okay? So I want to make sure I make that clear because a lot of people think that, oh, if I check my credit, it's going to hurt my credit score. That is not true. If you go out there, if you go to Credit Karma or some other website, or if you use some other tool, whatever, to check your credit score, it will not hurt your credit score, okay? The next thing that I'm going to cover is what are the tips to maintain my good credit? I finally opened my first credit card. How do I maintain my good credit, and how do I keep increasing my credit score so that one day, I could buy whatever I want? And that's the goal. You want to eventually get there, okay, guys? So the first and most important tip that I could give you is always pay your credit cards or debt on time every single time. Now, there's been cases, including myself, my own situation, where I buy a trip to go to Mexico or whatever, and I don't have enough money to pay the full balance. If you don't have enough money to pay the full balance, that is okay. As long as you are making the minimum payment every single time, you're gonna be okay. Your credit score is gonna be intact, and you should be getting your credit score should go up over time. Now, the next thing that I want to talk about is you have to apply for new credit. So, for example, I got all these, promotional mailers. When you get one of these and it's a promotional mail, especially a 0% 0%, let me show you this one, especially a 0% on balance transfer and purchases. These are good. This is free money, guys. This is free money. Hope you guys understand. This is free money. You should always be applying for one of these when you get one, okay? Now, of course, don't apply for all of them. Like, I wouldn't be applying for all these at the same time. It's always apply for at least one every 6 months that makes sense to you, to your own personal finances, okay? The next thing I want to cover, next tip is never close a credit card even if you do not use it, okay? Never close down a credit card because, again, that's going to hurt your credit. That's going to hurt your credit utilization score. It's going to go higher and it's going to hurt your credit score. So never close down a credit card, even if it's a retail card, even if you don't use it, even if you only use it once to take advantage of a promotional, whatever, never close it, okay? Always leave it open and let it be, okay? The next thing, the last tip and the most important tip that I want to talk about and discuss is this one. Very important, guys. This is where people actually end up getting hurt the most. Never ever let anybody else borrow your credit, okay? Again, credit is an honor system, okay? This is your own honor, your own integrity. You don't want to let that borrow to anybody else because someone else may not be responsible and may not have that skill set, that responsibility to pay that on time. There's nobody out there that's going to always have your best self-interest than yourself. Never let nobody else borrow your credit. I have a lot of examples, guys, of personal, family, friends, and members, and it's something I discussed earlier, where they co-sign their credit to someone else, so a friend or family member, so they could buy a car or a house, whatever the case may be, and then later on find out that they did not make their payments on time, and now their credit score is damaged, okay? And that causes a lot of problems. It causes a lot of financial, economic problems. It causes a lot of friendships and emotional issues. A lot of people lose friendships over that because they let their friend borrow their credit and then they didn't pay in time and then it screwed them over. Now they're really mad at their friend. Hey, what happened? Why didn't, or their family member, worse, your family member, because you are letting borrow someone your honor, and maybe that person, and not that they're bad people, maybe that person is not ready. They're not. They have the responsibility to pay on time. So do not, never, ever let anybody borrow your credit. And if they don't have credit, show them this video and show them the steps that they need to take to build their own credit. You will do them more good by educating your friends and your family on how to build their own credit. One of my favorite quotes out there that I really love, and I always say it to friends and family, you could give a fish to a poor man and they will eat for one day. But you could teach a poor man how to fish and they will eat for the rest of their life. I love that quote because it's so true. And everybody could do it, guys. If I could do it, you could do it, okay? Please share this video to family and friends who really need to understand this. This is for their own benefit. Again, I made this video for my community because I love my community and I want to see them succeed, and I want to make sure I'm giving the education they need to be successful. And that's pretty much it, guys. I'm done with this video. I hope you guys learned something from this video. If you learned something, hey, subscribe to my channel. I'll be posting more videos regarding personal finance. Don't forget to hit the smash button and like it. And till the next time, guys.